Good morning, everybody. Hey, welcome to Wednesday, the middle of the week, June 17th. This month will be over before you and I even realize it. Hey, I want to thank you for joining us today as we get ready to speak with Dave with what's happening in the marketplace as a whole. Looking forward to that conversation as we do every morning. Hey, remember, I want to talk to you a little bit about risk before we get started. Remember, risk is the only thing that you and I have any control over. We don't control what happens in the markets. We have no idea of, they act on their own, they do their own thing. Sometimes it has nothing to do with what's happening in the economy, as we're really kind of seeing right now. And so what's important is that you know what your risk number is and how that equates to your current portfolio. And give me a call. And let's walk through that process and determine what your risk number is. 863-382-0037. Hope your day's off to a great start as Dave and I get ready to talk.
5, 7, 8. I'm Donna Lewis there. Morning Dave is here. We're at 8:41 now. That's 19 before 9. Every morning at this time, we double check to see what Wall Street is doing to or for your retirement fund. And remember, even if you keep your money stuffed in an old mattress, what happens on Wall Street does affect your retirement as time goes on. So that's why we do it for you. Downtown Sebring, we go to the offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, good morning. How are you this morning?
Good morning, Dave. Hey, doing well today. Excited to get to talk to you this morning. We're getting really, really thin here towards the end of earnings season. That's for sure.
Yeah, earnings season kind of got stretched out a little longer than normal anyway, but we do have a few reports coming out of companies. Start out with the macro stuff coming out of the government. We got housing information today, housing starts and building permits from last month. I looked at the original number. 947 housing starts last month and an increase of 4.3% during a pandemic. I thought that might be good news, but the market was actually expecting better than that, weren't they?
Yeah, they really were. Housing starts missed by a little over 100,000 starts. They expected to come in about a little over 1.1 million. So a little bit of a miss there, especially when you look at some of the housing contractors that we saw really had some good quarters. Maybe they're raising prices. And then building permits, that was close enough to say is in line, but still a little short, which is, building permits. The one thing about building permits, you don't know when they're actually going to come out of the ground, right? That's planning ahead. It could be a month, it could be 6 months before some of that really comes to fruition.
Much as anything, I would suspect building permits is kind of a measure of optimism as to whether or not I'm going to be able to do something big ticket. And the fact that it came roughly in line with expectations, I'm kind of seeing that as being at least a good sign for the economy, given the fact that our optimism is growing by a little bit over the last couple of months of reports.
Well, yeah, and the other headline I saw was home buying mortgage demand spikes up to 11-year high. So, so there are people still buying houses, still getting mortgages. So that's a good thing.
Understood. Put those two reports together with the fact that it was another big day on Wall Street yesterday. The Dow was up by a full 2%, up 526. NASDAQ was up by 170, and the Standard & Poor's was up by 58. We come up with kind of a kiss in your sister economic report, and maybe a little bit of profit taking. Should we be surprised with the conservative day today, don't you think?
Well, I'm still seeing some upward movement. That's not too bad. It's just dropped off a little bit from where it was earlier this morning when the home numbers came out. But still, we're better than 100 points on the Dow right now. So still not a bad start.
Yeah, not bad at all, given where we've been at and where we're trying to dig out of. Kind of a tale of two industries, just tidbits I found while I was scanning through the news ticker that I've got on my tip sheet. HSBC is still projecting that they're going to have to shed 35,000 jobs over the next month or so. That's not good news, but at the same time, in the smokestack business, U.S. Steel put out a report saying that they're seeing a pickup in demand from manufacturing. I'm not sure I know how to make of that, but it's definitely not an even recovery so far, is it?
Well, no, it's not. And we're going to talk about that here. Norwegian Cruise Lines really came out and said, hey, we're extending the suspension of most of their voyages through the end of September. Now, if you remember, a couple of weeks ago, they were looking at starting their voyages, all the cruise lines, probably that first week of August.
Yeah, I did. Yeah.
Yeah. So they've pushed those things back basically another almost 60 days before they start floating those voyages. And so let's think that that's really starting to weigh on the cruise lines again. I mean, they had a decent day yesterday. Most of them were up anywhere from 3 to 5% yesterday. Well, today Norwegian's down 9.5%. Royal Caribbean is down 5%, and then Carnival's down almost 5%. So
now, I noticed that Norwegian Cruise Lines was leading my pre-market big loser list this morning. I figured something had to happen to them.
Exactly. They came out with that announcement, and everybody else will follow suit. So that's kind of in the travel industry. And there's stuff about Southwest. They're going to continue at basically 2/3 capacity through the end of September. So we're seeing more and more of that kind of stuff too. That those things are getting extended.
I have to believe that this new increase in detected cases of the coronavirus, regardless of how you interpret it politically, this has got to be putting a little bit of hurt and jitters on the travel and hospitality industry overall, not just the cruise lines.
You're right, Dave. I mean, my wife and I were supposed to go away this last weekend for a funeral up in Thompson, Georgia. And so we decided the last minute, with all these increases, we're staying home and we're not going. So I think more and more people will be weighing that out and making that decision based on what's happening in their local communities.
Oh, yeah, that's a tragic and unpleasant decision for you to have to make. But at the same time, that's probably a sign that the population is also looking at the notion of, well, we don't need the government to tell us to stay at home. Pull in our horns, do the social distancing, wear the doggone masks, and with a little bit of luck, watching these case counts going up might scare a few people into doing the smart thing for their own health and everybody else's.
Yeah, and that's true. And that's kind of what the governor said yesterday, right? He said, look, I'm not going to mandate people wear masks. I'm not going to mandate things, this or that. But folks are smart enough to know, when they see an increase in cases that they know to socially distance. And if they're uncomfortable, they can stay at home. And so, and he's right. I think that if at least for the most part, I will say that there are sometimes I see folks that aren't being smart. And that does then lend to some concern about what's happening.
And the age groups of the people that are showing up as high detection rates these days in their 30s and 40s is kind of an indication that the folks that figured they were safe before, the ones that are taking the chances, now they're the ones with the bump in the curve as far as the ones that are getting detected the most.
They are, they seem to be the ones that are getting, they're getting the ill. But hospitalizations, I'm not so sure how much that age group's getting hospitalized. I know there are some, don't get me wrong. I've seen the reports. There are some getting hospitalized, but not the rate of the older folks and those that are, have immune issues. So again, I think it's being smart that we continue letting our economy grow or try to get back to some normalization. While people use some common sense and decide when and when not to venture out.
Absolutely. It's kind of the advice I've been throwing out now for weeks and months in here. Just don't be stupid and we'll probably do all right. And everybody's got a slightly different definition of stupid, and we'll just let it sit at that. Talking about reports, the big winner that I saw on my list this morning was one that kind of surprised me. It's because they put out a report. H&R Block is really going to town, aren't they?
Well, they had a good quarter, right? That was their fiscal fourth quarter. They beat estimates by 40 cents a share. They earned like $3 a share. Their revenue beat as well. Now their numbers were down from a year ago, again, due a lot to delays in filing deadlines, right? People have until July 15th to actually file their returns this year without getting an extension. So that was really good for them. I mean, they were up 1.6% yesterday and up another 0.75% this morning.
Not bad. Good start. It's something that's an entire business classification that I'd reacted to before what we've been talking, that with the simplified tax prep, forms and everything under the new tax act, I figured that full service preparers were under a little bit of pressure, but evidently the desire for a quick refund, that feature that the full service preparers do have, helped them this year.
Well, it did, but you're right. The simplification did take even some people out of the system where they don't even have to file now. So that's going to continue to be an issue for companies like H&R Block.
Understood. Other indications you got out of the report so far?
I got a couple here. I got Oracle. They reported they beat by 5 cents a share. Now, revenue did come in a little below what was forecasted. They're saying that some of their key customers are in like the retail markets and hospitality markets, and so they're pulling back and postponing their spending, and so that's kind of the outlook Oracle's giving right now. So that's why they're trading down a little bit this morning. They're down 3% as we get ready to open this morning.
Another cautionary tale: give guidance at your own peril. Even if you have a good quarter, it can really cream you, right?
It can. Hey, another popular one is Groupon. Groupon did better than expected. They only lost $1.63 a share. Not bad, right? Mm-hmm. They were considered to lose $1.91. So that was a pretty good deal for them. Revenue, though, was a surprise. It came in above estimates. I think some of it is you got people shopping from home is probably helping them a little bit too. They're trading up 5.75% this morning after closing up yesterday 12.5%. Yeah.
As I always say when you see numbers like that, hey, wow, party time. It wasn't as crummy as the world thought we were going to be.
Exactly.
Right?
They really are adding to it there. So that kind of really that lays out kind of the earnings that we've got, and we've got 13 days left of earnings season, and then we get to start over again.
You have to start it all over again. Resetting the table from yesterday. Everything was up yesterday by as much as 2% plus in the case of the Dow. 45 minutes before we opened this morning, Phillip, put it all together. Where we're heading early on.
So I want to do something I don't always do or very rarely do, and that's kind of whatever that word is, look ahead a little bit, right? We've seen some major pullbacks this morning. I saw the Dow up 180 points this morning when I woke up at about 4:30 this morning, and now it's down well below 100. So we're down to $86 right now, up. That's 1/3%. S&P 500 is in the same boat. It's up 0.4%. NASDAQ's up 0.5%. So everything has dropped dramatically since we've seen the housing reports and some of those other things come out this morning. So if we look at silver and gold, so my point was we could see a flip. Was it Monday we saw starting a negative day and it ended up very positive. Today we could see a positive start, and given what I'm seeing right now, we could end up with a negative day at the end of the day today.
That's a distinct possibility because there's about a 50-point difference between my delayed quote and your instant quote as well, and it's not in a positive direction.
Yeah, so if momentum continues, we will end up probably in the red today. I'm just guessing. It's not a scientific situation at all. But so silver and gold is split this morning. Silver's up 0.25%. Gold's down about 0.6%. Crude oil is down 1% this morning, Dave, to $38 a barrel.
All righty. Overseas markets, Asian markets closed mixed. Hong Kong is kind of recovering a little bit. Japan had a really, really big day yesterday, so today they were off by a little bit. European markets, for the most part, in the green ink territory, 45 minutes before we start trading. Phillip, advice is always needed to be able to make sure a retirement can actually be one you can afford to do. People like you can make that happen for folks. How do I find you to make an appointment?
That's one of the things that I find interesting. There's a lot of folks that need coaching to get into and through retirement. And that's really what we do here at Statler Financial. Give me a call and let me help coach you into and through retirement. 863-382-0037. Catch us on Facebook. All you have to do is search Statler Financial Services, like our page, and follow us there, where we rebroadcast this every single day. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. to noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m.
I do appreciate it, and back here again tomorrow morning on Light FM. Phillip, thank you so much. You have a great day, all right?
All right, man. You too.
Take care, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Well, I mentioned a little minute ago before I signed off with Dave that we were continuing to see a decline going down. You can see here that that's still the case. When we talked to him just a minute ago, we were down 80. We're up 80. Now we're up 30. So we may, it's not even 9 o'clock yet. We very well could see a negative open, an open to the downside as we get ready to start today. Hey, it's important that you know how much risk you have in your portfolio. I know you're probably tired of me saying that, but it is. That's the one thing you can control is the risk. Give me a call. Let's find out how much risk you have in your current portfolio. 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.